Good afternoon, guys. Welcome back to another stream. Today, I'm going to talk about non-farm from last week and just a little couple of points that, sort of I did and, I made, and more about sort of having an idea and a plan and actually executing the plan and, moving sort of a step forward and having a good understanding of how you want to execute your plan and having a clear idea. And then sort of, just moving on to sort of the next stage. So I'm pretty much really just going to go through a little review of what I did, price ladder, and just a couple of points that I think that, for me, that I can sort of basically learn from, and we just keep moving forward. With the development, because I think, it's coming along okay, and understanding sort of things are much better for myself. But we start with, this is the chart of, the pen might not work. No. The pen doesn't necessarily need, but so you have 2 and then the 5, 10, and then you have the ultra underneath that, which is a 25 year. Then you'll have gold at the top and then euro underneath. And by looking at sort of this as a 5-minute chart pretty much throughout the rest of the day until the end, you'll see like the correlations and where sort of things were, if you want to say lagging or not lagging at all, what markets were sort of best to trade, sort of in, let's say the foundation of how everything came across. But what you're sort of leaning on, so I traded the gold and I traded the ultra at these two over non-farm, and I sort of learned that really I think trading one market over this is a much better idea, just to gain sort of more of the experience, and you can actually get away more size by leaning on sort of what another market is doing, because yes, this did a good move and this did a good move. Whichever one had better value to you is up to yourselves. But I basically lent on, more the longer end and the gold, and when these turned around, you could start buying the gold quite well, and you could have been very aggressive. And in my head, the idea for me, I had gold finishing like it had really. But there's another thing of what you want to do is have an understanding of how it's going to go from, like, say, down here to up here. What's it going to do? And you did get a massive pullback, and, you go 50, 60, 70, 80 ticks on side at this point on this candle, which is what I did. But in the end of the day, it's done another point above there. And sometimes, obviously, these sort of ideas are mapped over time. Your execution is very different, which, again, is something what you debrief and what you learn. So if I then go to sort of the annotation of each sort of note briefly, is always sort of go with the 5, and then I'll dissect it from your longer term, any technical idea, etc. But what you got, this is just a 5-minute and sort of a quick little understanding of what it was. And sort of this is the sort of move that you end up getting at the end. And this is sort of what I had in mind of it. It can finish really high, it can strong, it can sort of trend, blah, blah. So you had the initial first choppy part, followed by sort of a next point where it broke the highs quite aggressively. Then it did a very deep pullback, which sort of held sort of the next level of the highs, followed by then a little chop. And then eventually you got that straight line move where you can sit and hold. So for me, I bought down near the bottom, played the reversal, using a 50-minute chart as I show in the next, and then playing this, I got long in the little chop bit, and then you got aggressive move through the highs. I never traded it after the next bit afterwards. But again, it's trying to understand how you can sort of trade this whole idea into one big idea, how you can maneuver that, accepting 50, 60 tick pullbacks and having a real clear plan of how it can maneuver. So the first little idea was a possible pattern, a pattern that you've seen pretty much along the CPIs and the non-farms are sort of a little beat or even a big beat and reversal. And this was just sort of the 15-second chart pretty much. I bought back through here. I literally took it back up completely fine. I traded, half the size that I would normally, just because it gets more volatile and it can be a little bit more risk, and a little bit more risky just because of the whippiness about it. Good trade there. I tried to buy the long bonds at the longer end at the same time. You got the little delta change, but a little sort of small technical idea. And again, it's trying to understand how to sort of, what I'm trying to do is how can you get a bit more size away, because you're being a little bit more aggressive on just a smaller time frame sort of structure there. Following on from that, as I'll just go down the chart for the gold, then the longer end. This was sort of the second time. So this was the second bit where I think you had much better value in the idea, where you had the bonds eventually then started to turn back up, and obviously gold's, you know, holding up here. And I started to position in this box pretty much where sort of I've drawn this line, sort of positioned way too near the top. And I was sort of trying to lean on these bonds taking new highs and gold not really going anywhere. And you try and understand to try and pick this up. But the fact that I bought it near the top of the box made it harder for me to then, you know, be a little bit more aggressive and try and hold things, you know, 20 ticks offside at one stage. But this was the core move that you want to be taking. But again, you know, from all of this move, you have a massive picture in play. And I didn't know, I wanted to then just keep hold of it, which I did. And I covered 3 out of the 4. And I probably gave a chunk of the P&L back, holding it all the way back here, trying to buy more. And in the end, I probably got out around near the bottom, which isn't really ideal because I had that idea in mind, but I didn't really know how to trade it, if that makes sense. But this bit here on the breakup, you had some really good price action where I think you definitely could have then started to hit through and take a bit more advantage. Delta turned, but I was leaning a lot on the bonds just taking new highs. When gold was chopping, you did get a seller at the top from here and from here, from the initial piece. So this is then the ultra at this stage, where this is just the 5-minute chart of this. And you can sort of see very similar sort of movement really, because except that the real chop was much higher up and it was much more stable, and you could have executed this so much better than what I did, because I was trying to buy 2 markets, and this is where having just the one makes a big difference. I tried to buy on this initial move. As I say, I tried to buy this one, and then I got out as it started coming back at me, technicals and all that, sort of adding in line for sort of a nice break of range, which is when you got this move, which eventually I got out. I think I just took this chunk at the top here, sort of went from my sort of rote to the sort of high, where really if you had a better understanding and a better clear plan, because I ended up trading 2 markets, and this is where having a clear planning really comes into it, that you could have started passively picking this up, where I made a bit of money in the beginning and then I gave it all back by trying to sell 5-year and just not even in the plan whatsoever, just because the Bund was trading really low and it made another new low. So I thought, you can trade that, which is where sometimes in that curve sort of idea comes into play quite a bit. And then you get sort of your overthinking what the curve's doing, when really you just detach yourself from that and just trade the products that you're most comfortable with. So in the end, you got a bit of caught up in that. And then that's what I mean by having also that one clear structured plan, where if you want to stick to the long bonds, trade those, you're going to do 10 times better buying this than you are trading sort of 2 markets. And then this was 5-year, 5-year, and you can see how choppy this was, where I'm pretty much I was selling the bottom of this range before you get that unwind. And this is where I believe there's been a lot of edge really in the patience game over the CPIs and over the non-farms and over the Feds, and you're taking a lot of time before there's a move, because you're getting chopped up in the initial number. Be patient, and then you're getting this nice leg afterwards, which again is very important, just being much more patient. And then these are just the footprints over, and this was the ultra, so this was the little pullback in here before you had another move. This is that next bit, this is all of it together. Here's your passive entry afterwards, where I kept selling 5-year. Gold, for instance, this is that initial move, so this is on the 25 tick, I believe. Yeah, and then you had a buyer step in down here. When you can see that buying change over 300 on the delta. Sort of it's like a point of sort of recognition, a point of reference, where you've seen, okay, buyers are stepping in. And then afterwards, what you got here, where I started buying in this block here, probably bought, I think I bought around up the top here. Around this top bit where I put high absorption really. And then holding that and being a bit patient with all the understanding. You got these 2 highs where you both traded the same amount of level. And then once you break that, you got that move higher, which was the point of trigger, point of where you could start to add in. This was the afterwards. Sort of I went through it again. Where could you have added in a little bit more? Can you have been a bit more patient and carry on trading even after doing quite well? And it's something I do. I hold back after that sort of point. And this is a bigger picture time frame on sort of the ultra at this point, where you had a nice little range. or a nice little ledgy high range where you sort of had the pre-Fed offer, then you had a move after the Fed, back up, and then you had the non-farm move back through the highs. So again, it's sort of that in time to come, you probably might face with something very similar, maybe not the technical idea, but you might get a pre-Fed offer followed by a next day reverse, followed by maybe you have a non-farm, which therefore you might be able to trigger your mind and miss, and you've got a big rally, etc. across all markets. And again, this was just profile structure and sort of just digging in a little bit deeper in a market where I haven't traded before, traded over the Fed, but I'm just trying to find markets where I could find a little bit of edging breakout wise, a little bit of a thinner market, etc. Trying to be involved a little bit more. And that's pretty much it. So I just wanted to sort of have a brief conversation on this and then the ladders and how, seeing a bit more in depth of that, of how these markets traded, mainly focusing on the gold, mainly around, this bit quickly, followed on by just trading this bit here very quickly, and then just a couple of pointers at the so at the beginning. Just want to quickly show you from sort of this bit, just looking for a break back above, I think it was around the 90s. So you've got gold in the middle and you've got the ultra to the left. And you're just sort of looking for that little 15-minute structure, and you're sort of looking for a bit of change of pace, looking back up, you're sort of noticing what other bonds are doing. I think the 5-year was quite key because it was sort of struggling around this area, around the 10s bit, just below here, little low volume point. I was using that as reference as well. And then obviously I just bought the gold, and automatically you've gone on side where I could have been a bit more, aggressive with that, maybe bought 4. And in the end, you can always see, and I've noticed it a lot, my mouse is always just hovering over, and I was trying to be clever buying 2 markets, and I'm always hovering over, so I need to buy it. Well, I need to sort of do that initiative a bit better and just take control a little bit more. And you can sort of see the correlation between them all sort of all bouncing across the board. I mean, this is pretty much, I know it sounds quite basic, but this was in the plan. This was sort of having a good plan. But I'm trading 2 markets, and the concentration to have 2, again, is taking a lot of mental capacity at this point. So this I was quite right at this stage. Obviously, clearly, just going on side in the gold really well. And this is where sometimes I've only bought 2 and you've gone, okay. And then I'm looking at this, I'm trying to be smart at this stage and trying to buy more because you've got technical levels that are coming into play. Can I pre-position for that? And again, this is where you've got that first scalpy idea that you can take, and followed on by that patiently weighted trade later on, which has so much more value than buying everything here and taking it up here, because you're seeing this real extension. There's 50 ticks now, you're on side, and this hasn't gone anywhere, these haven't gone too far, so it's sort of that gold doing that overextension. But in the end, pretty much this doesn't make any money on the left, and I take something out of the gold in the end. So I sort of have this, like I was explaining, that idea that gold could definitely go and do, because you've seen these moves, especially either over the CPI, you had that similar idea where there's a good chance the gold can just really sort of extend. And after this experience, I end up just trading the gold over it. I don't bother trying to, make myself 10 times harder to sort of trade. Where's the next? So at this point, that was sort of the end of that. And then if I drag to near the end, because I have to change. So as you'll see, then the ultra has started to go at this point. So this is the second point of the trade. So that first one, again, hasn't really done very well. I started to sell the 5-year down here, where I pretty much gave a lot of it back, and I started to trade some silly ideas, and I got a little bit, let's say, too emotional at the point, really, of trying to have a understanding of what was going on. And then you're seeing the ultra do exactly what you want. followed by the gold starting to do it. And you had pretty much trading around the 80s, I bought the top of the range. And while you've got bonds across the board near their highs, and I was like, okay, you may have to then wear a bit of pain at this point and try and understand it, because that's pretty much, what happened in the end. But from previous experiences, and this is where you sort of the previous experience is helping you out. Don't get out because you're offside. The trade, not every trade you do is going straight on side. These were the levels that you had just marked above in the ultra. So a bit of pain at this point is, doing you some sort of justice. And it's very hard to sort of average your position when you're offside, because you could buy 74s and it does trade down to 60s, I'm pretty sure, while these are at highs. But this is just building up positioning and building up a bit of steam at this stage. So leaning on that, and this is where, having that sort of idea in your head where you're sort of thinking about it, and you can sort of see at this stage. This is the sort of stage where I pretty much just bought the high of the range here, which is quite silly and not really paying clear enough attention really. But it's a trade that I wanted to take on, and if these all markets are going to take on the the move that they say the dovish play, shall we say, you're going to get that. So then I end up buying through the levels here. That stays a bit churny for a little while, and you're just being a bit patient with this. And this is sort of that last squeeze where it traded down to sort of 60s. You're sort of pushing. It tried to push out everybody that is sort of which is short, and you can sort of see every time it traded back and forth. You can see people were willing to pick it up lower, but willing to sell here. So your sort of point of reference was once you start to establish above the 80s, I do believe you then could have started to definitely be much more aggressive, and you'll sort of see in price action in the next part. This is where, again, your understanding of execution. So really then I've sort of bought a bit lower, made the price a bit better, but you do pick up the pace in these markets. And then you started to trade back to these 80s where you'll sort of see this change of price action through this. As these are all kicking on, you can start to then pick up. And then this is where I believe, and you've got to be ready to do this, that you've seen this extension and you're seeing a similar bit of price action again there, but they've been willing to pick up the whole time below. And then this is where you should have been starting to pick up. You see the bid size, which just flicks about, fakes it about. You're seeing Bund back to the top. Silver I brought up on the far right just to pretty much for correlation reasons. And this is where you should start to, and I should have started to build a bit more conviction at this stage, where I could start evading a bit harder and a bit more aggressive, because it's just a previous experiences of seeing this and taking charge of your idea. You're seeing this is really extending, going on side, and this is where being willingness to take a little bit more risk. And this is where also another thing that I do a lot is definitely wait too long and way too much confirmation, because I could have been bought in 83s, 84s on side. I could have been bought two more. You're not ruining anything, and then I got a buy here. So now when you start doing this, when you buy, you're seeing more confirmation. Your price is only getting worse and worse because you're buying worse prices, and then you're getting this little flush back here where you bought 93s and then that price. And this is where mentally I start to struggle, and this is where I do make a few mistakes. But you're seeing all markets across, and this is where you can really sort of establish your idea, and you could have been very aggressive much lower, and you're getting that move now. And once you take the higher fall, you can definitely start to unwind all these positions, because I felt like it was really set up for this, having that idea. And once you're at this point, I'm like, well, I've only bought 3 where I could have bought maybe 8 or something like that, much better prices, and trusting exactly what you're seeing. Because you're trying to then develop on these sort of ideas, which really is the first time of having an idea with sort of that execution sort of process in the works. And then I sort of buy one more at the top, because you sort of hold just really because of that price ladder movement, but really I've sort of bought price way too high in the end, and then you're sort of just leaning still across absolutely pretty much everything across the board. And this is where I thought you were going to sort of really get paid much, much more with that sort of idea of that real big extension move, which is what you got throughout the whole day. And this is probably sort of that like exhaustion type play in the end, where it does do this really big move, and across that they're pushing these bonds all across the way, all across the market, should we say? But this was, I think, this was a high, I believe, at this point. Well, it started to churn a bit more, and I then decided to then sort of get out of pretty much everything, and I still sort of had that idea in play of what could happen, but it's then trying to have the function and the background behind it, that plan of being able to then go onside 70-80 ticks and let it come back. And as you sort of see, as soon as it then starts coming off the high, because I've got that plan in my head of it doing exactly what I'm doing, I'm out the ultra, and this is where that panic can come in, because again, the plan isn't hard enough and strong enough because you haven't traded the idea, let's say, before. You'd end up taking a nice chunk of the move when really there's possibly another 100 ticks in this idea. There's another, I think, 150 ticks in this idea through that high, or 100 through that high. So that sort of planning and idea generating and execution idea all comes into play. But that is exactly what I did, and after that didn't touch things anymore. But again, it's all this idea generating and execution points and trading your idea. Doesn't matter how much size, but you start generating ideas with the correct execution, we can then start to build. And again, that's how we can all get better. So even like the CPI, I didn't really do exactly what I said. I've sort of delayed myself a little bit, just because pre-experiences with that, it still got involved in it at the end, nowhere near size-wise. You missed the first initial good move in the goal, but you have to then evaluate that afterwards. But a few little points. Patience in that understanding the trade you wanted to take. So there's sort of two trades there, or let's say there was one big trade, but two little small ones in there. You could even possibly done three. How can you then picture this whole idea of gold doing a big move on one day? Knowing the style of execution, visualization of how you want to execute the trade, followed by holding the trade and how you want to stay in it. This is then that visualization from the bottom to the top and how you want to manage, how you then distribute size. Lower the time frame on your charts, because I use a 15-second. I think I'm going to start dropping that to a 10, maybe even have a 1 second up. After CPI, you can see the 1 second generates a lot of edge there. Change in price action, especially when it started to break those 80s after you've sat sideways and all bonds are going. Another little execution point where you can start to execute like that, bits of price action. Sticking to just one market again, trading two markets, the lack of concentration then comes into it. You start to lose the concentration. When you have one, you can really lean on the other, and that just add this size in. That's, simple as that, really. Not getting carried away. Thinking about over trading as I gave the P&L back, and I got lost in track at that time. The good point is to turn that around and gain focus again. Patience over the events. Not a trade comes every single time off the number, etc. As you can sort of probably witness that from yourselves. And then sort of letting these bonds do their sort of like spread plays, whatever, and then getting involved. You sort of see there, again, it sort of took half an hour for it to sort of get established before moving. But there are sort of points I wanted to get across today. Again, some more good learning, etc., and taking on ideas and taking on trades, and with a good thought. That was a good thought process. It didn't idea, plenty to work on to then increase that, etc., going forward. But that's it for me today. Normal information, want to get in touch, info@axiafutures.com. I'll be back next week. Cheers, guys.